Hello everybody, welcome to another episode of the Market Talk. Same clothes, different position. I'm Darren, sorry.
I'm Hao Cheng.
And I'm Ali.
And welcome to the Market Talk.
Today, we are going to be looking at current trends.
Okay.
And not only looking at current trends, but also sharing with our viewers what sort of portfolio do we have to tackle this current trends. So by current trends, I mean inflation, bear market, what else? The war.
Yeah,
the
Ukraine
war.
war.
Like, what do you call it? Like property decline. Decline in the stock market for tech stocks.
Yes.
Maybe the
Suddenly
US,
dropped a
China.
bit.
Yeah, so
US-China
US-China war and
Yep.
some trends there. And so we in this episode we want to sort of get a picture of what's happening, but then also from our experience share what we do. Okay, where shall we start with inflation? Okay, while these guys are googling, let me give our viewers a quick rundown of what inflation is, right? Inflation is when your money is worth less than what it used to be. Have you noticed when you were younger, a lollipop maybe costed 50 cents? Now that same Chupa Chups is $1.50. That's inflation in play, where money is has like you can think of it as an interest rate attached to it, and every year the value of that money declines, and that is what we call inflation. Inflation is actually good. Inflation means that your economy is growing, but it is when you face hyperinflation, where suddenly $1 is useless, and then you have like $1 million to buy one Chupa Chups, which actually happened in Zimbabwe.
Yeah.
It's still happening there, I think, where they are facing hyperinflation. Yeah.
Passed also under the German Weimar Republic.
Oh yeah. So that is in a nutshell the inflation. What's the current inflation rate?
Current Singapore inflation rate for August 2022 was 7.465%.
7.465%. That
Yeah.
means if I bought a lollipop 1 year ago, it was $1, and now it would be about $1.10. So that's what inflation actually means. Why is this scary?
I guess the whole idea that your money is becoming worthless. I
Yeah.
think that's the biggest worry, right? If you don't do anything, you'll be able to buy less and less over the years.
Yeah.
And eventually what you have is not enough.
Yeah.
Yeah,
So-
especially with such high inflation right now.
Yeah.
Yeah. So actually, according to I've done some research on the US economy. So right now, like in the US, like inflation is around 8.2% as of like this as of September 2022.
Okay.
Yeah. So basically, like on October 2021, it's basically around 6.2%.
Okay. Yeah, so inflation I think is not something we need to be worried about, because it is part and parcel of modern day finance. But what you need to be worried about is if you are misinformed or you're uninformed about how to tackle inflation, which is where investing really comes in, which is what we do. And what we like to talk about in the Market Talk, because there are ways where you can use your money to beat inflation and make sure that you have the same power, right? So I think that will be our next segue, talking about investing in a sense. So investing as well, I think the world is upside down right now when it comes to investing. Yeah. For those of you that are new to investing, you can invest in things like bonds. You can invest in things like stocks. Invest maybe property. I think
Yeah,
that's
property,
an investment.
yeah,
Property is an
yeah.
investment.
Yeah.
So investment means vehicles which allow your money to grow. Okay, what we'll do for you in this the Market Talk session is talk about how we are beating the inflation with our investments,
Our own portfolio.
our own
Yeah.
portfolio lah, in a sense. So that ways you can learn that okay, inflation exists because of the war, because of this, because of that, and what to look out for, what not to look out for, and what to be worried about, what not to be worried about, in a sense. Hao Cheng, you want to start first?
Okay, so I'll just talk about my portfolio first.
Yeah, sure.
Yeah, so right now my portfolio is mostly concentrated in stocks, because like right now there's the bear market, and then like sort of like as a value investor, like the bear market is like sort of like the fire sale for us to buy all the stocks which we want to buy.
Yeah.
Yeah.
So bear market meaning it's a downturn, right?
Yeah.
Bull market would be when there's a upturn.
Uptrend
Right now
in the
there's
stock
a-
market. Yeah.
But
there's
isn't that
downtrend.
like scary?
Yeah, but
market?
if you know the business which you are buying, like,
Yeah.
it will not be as scary, because like ultimately you know the fundamentals of a company. And you know you are buying into a good business. Yeah, so I feel like it's not as scary for me right now.
Okay.
Always going back
Just
to the
knowledge.
knowledge.
Yeah.
Always
Yeah,
back on knowledge.
Yeah. So you are now mostly in stocks.
Yeah, most of my money is in stocks.
Okay.
So far my worst performing stocks currently is this stock called Alibaba, because like So I feel that the price is depressed right now because of the US-China tension, and there's that uncertainty whether there's also uncertainty over the CCP's actions, over Alibaba. Maybe they might crack down on Alibaba, which they have done in the past before. Yeah. So that's this. I feel like this is the reason why Alibaba stock is down so much right now. But according to my research, it's still a good business with good fundamentals. So actually, I'm not really worried about it.
So how has the past trends been like for the company?
Basically, their revenue have been increasing over the years. But the stock price is depressed due to this negative sentiment towards the company. Yeah. One of my best performing stock is this stock called Foot Locker.
Okay.
Company
I have that as well. Oh,
Yeah.
I had that.
Yeah. So the reason why I bought this stock is because I understood the company, and I look at their fundamentals, and I find it to be really quite good. Yeah. Their support in their prices is because they kept on beating their earnings call this year.
Okay.
Yeah. So that's why there's this big pop in their prices for this year. Yeah. Yeah. So basically that's my that's just a brief introduction of my portfolio. Yeah.
So, I guess I'm just talking about the money that I have in the stock market. So nothing to do with the cash put aside and all that, right?
Okay.
So, I mean, like Singapore market and the US market. So Singapore probably about 1/3.
Oh, okay.
And US maybe 2/3.
Okay.
But in the US market, the money is just there because I'm selling options. I'm not holding on to any stock at the moment yet.
Okay.
Yeah.
Wait, so has your options been exercised?
Actually not yet.
No. Okay.
Yeah. Even those that are those are in the money. Yeah. So it hasn't been. I guess like what Cayden emphasizes, right?
Yeah.
I mean, people want to trade, and that's not what we do. Yeah, you see, and that's the danger. So just come for the class, and then you understand, and then do it the smart way, lah.
Yeah.
Make sure you know before you do it, lah.
Yeah.
Okay? Yeah. So basically that's it. In the Singapore market, I try to go for more dividend paying stocks.
Okay.
But then of course I did make some mistake there. I'll explain later. Most of my Singapore stocks were actually bought during the COVID period, so I'm lucky in that sense because I do get the capital gain now.
Okay.
In addition to that dividends, so there's a bit of that, and then of course I just bought a bit of the STI ETF lah. I mean, So when I say I made a bit of mistake was when I was just looking purely at dividend stocks. I purely looked at dividend yield only.
Okay.
So there was actually one company which I went in without fully understanding, and that's a mistake you should never do. I actually bought Dairy Farm.
Dairy Farm.
Yeah, the ones that run Cold Storage, 7-Eleven, what else? Guardian. I can't remember. Quite a few lah.
Yeah.
Right. So you think like, I mean like supermarket should be quite okay, right?
Yeah.
I mean, should be quite okay, right? Yeah, but apparently the price has been dropping I don't know, from 3+ all the way down to plus now. It's just been dropping and dropping and dropping.
Okay.
Yeah. The dividend probably look good because price dropping, they pay less. That's why the percentage stays the same lah. So in a way, that's my mistake. See?
Okay.
I just took what was there.
Yeah.
And that was before I attended the class also lah. Okay. Yeah. So don't make the same mistake as me.
Yeah.
Make sure you actually understand the company before you actually take action lah.
Yeah.
All right.
Yeah.
So how's that company faring now? Do you still hold on to that company?
Actually, to be honest, I'm still holding on to it because I didn't buy a lot.
Okay.
So to me, it's like, okay lah, it's fine. Just leave it there, see how it turns out lah.
So the dividends are still coming in, lah.
But it's very little lah.
All right.
Okay.
Okay. But then like the beating inflation kind of situation, or
Technically, it's still beating. So yeah, still okay.
Cool. My portfolio. So to be honest, I don't have in mind that I'm going to beat the inflation. If I did that, then my approach would have been top down. But our approach as value investors is more bottom up. Right? So for our viewers, if you are new, you will find there are a lot of talks about index funds and S&P 500. These are really top-down approaches where we look at the economy as a whole. But as value investors, so far you've heard us talking about individual stocks and how we look at stocks. That's bottom up. And so we analyze individual stocks. We find that they're really good companies, great businesses, and we invest in them. My portfolio right now, when I compare cash and stocks, I'm actually more in cash. Yeah. Like you also, I bought some stocks during the COVID-19 downturn. They grew, made a bit of money, and then at the start of this year, when things were starting to look shaky, I sold them off. Yeah. So I sold off those companies which I thought would still hold themselves well. They are all in the red now. But I'm still confident that they'll be able to hold themselves.
Because you know
It's-
the companies are.
Yeah.
you know.
It's just that I made the mistake of buying it slightly at a higher price. Slightly at a higher price. If I'd been super conservative, maybe I would have bought at a lower price. Yeah. But so like you, I bought Foot Locker, and Foot Locker was one of my winners. So right now my portfolio, I think about 60 or 80%, 60 to 70% is cash.
No.
And the rest is invested in the stocks, which I'm not ready to sell, although it is in the red. Because I know the companies are good. But I have to say, my worst performing one is Meta. But when I bought Meta, it was not at its peak. It was growing. It's just that the decline now has dropped further than when it was,
it's
so
dropped
much,
so
right?
much.
Yeah. But the company as a whole actually is sound. They've got like
it's fine.
3 billion people in their platform. Their revenue has been growing year after year. Facebook, Instagram just is instant money making for them without doing much work. They do have competition from TikTok and stuff, but not like killing their business altogether. It's just I think now there's a lot of bad news regarding their metaverse project.
The metaverse venture.
Their metaverse venture,
yeah,
yeah.
uncertain.
Because like those people who sold off the Meta stocks, they are worried about seeing the future that Facebook has or Meta has. But I still have some faith in them. They are a little bit dicey now, but when you're starting any new thing, it's always dicey. And that's my worst performing stock right now. But I'm still confident. So value investing, the one thing I like is based on fundamentals, right?
Yeah.
And if you attend the course, you will learn value investing, and you actually learn why you should be invested in a company. We look at the company, not just the stock price. And Meta gives me those vibes of a good, solid company that is poised for growth. Like if the metaverse makes it right, Facebook will be the first one to make it big, in a sense. Yeah.
Also, Meta, the debt is also quite low. So
Oh
actually,
yeah,
if you take a look at their cash, they can pay off like all their
Yeah,
debt
yeah.
with some cash remaining.
Yeah,
still.
so I love that about Meta. Like for years, they've not had to rely on debt. I think the debt they have also is like
Should we find? I don't know because I don't have.
Yeah,
numbers
no,
offhand also.
we can
Yeah.
find.
Yes,
Yeah, maybe you can.
Okay, so we're gonna use the VI calculator, right? So
Yeah.
so the Meta company ticker symbol is META, and currently their debt to equity is
0.1.
0.1 is ridiculously low
Yeah,
for a large company. Yeah,
yeah,
ridiculously.
it's really low.
Yeah.
And it was actually hovering at 0 for what? 4 years.
Oh, yeah,
from
that-
1.4 to 1.8.
Yeah.
There was some stock I actually bought during that period.
Oh.
So I've been holding on to Meta for some time. But I made another serious round of investment in Meta recently. But
It's good.
there's like at this I think it was the end of last year around there. But when like the news broke out that all the tech stocks started dropping, then Meta also dropped, right?
Yeah, the sharp decline.
Yeah, but I'm a holder because long term wise the values is still there in the company.
Can't time the market, right? So
Yeah,
just-
can't time the market exactly.
But do you guys
confident,
know
just-
like the reason why like tech have been falling so much like this year?
Yeah. What is that about?
I think because like many of these tech companies have not been earning don't have really good fundamentals actually. Like some of them actually have not been profitable for very long. But
Okay.
like many investors still jump on the bandwagon
Okay.
because of like the hype, they feel like maybe this company will do well. But actually the company have not been it's not like profitable yet. Yeah.
Okay.
So that's why during this bear market then maybe all the investors have no confidence in the company and just
Yeah.
sell off.
Yeah.
So I think there's one company called C. That's not been profitable for some period of time. Yeah, but maybe due to the COVID-19 and people jump and during the bear market people jump on the bandwagon and then push the price up. But now after people found out that they've not been profitable, then that's why the price dropped.
I think Cayden did, or was it Cayden? Was it Hillary? Someone did a video on that as well,
Yeah,
so
yeah.
right?
C,
Yeah,
right?
yeah,
See,
yeah, yeah.
So
Yeah.
watch that video.
Yeah.
There's another company, tech company related to this that has dropped and it's always in news and people don't seem to understand that it is a scary thing, which is Grab. This one is very different from Meta. So I think people get confused when they hear tech stocks that let's just take the whole industry as a whole, which is the top-down investing methodology, which is I look at the economy as a whole or I look at the industry as a whole is going down. But as value investors, when we look bottom up at the companies we buy, we know we are confident in them. Who in their right mind will invest in Grab? I don't know. Grab is one of those losers who deserve to lose,
Maybe they
right?
see them everywhere. Like because there's the
Yeah. So there's a confusion
Also,
there.
see
Yeah,
because you see the
exactly.
Shopee
Yeah, you
advertisements.
show me
Should
every
we
day.
pull up Grab and like?
Yeah, let's see Grab.
Yeah.
But that's the thing. So as value investors, we have learned that we want to invest in companies that have a good growth run rate.
Yeah.
That means for 10 years, they have shown that they are profitable and that they are selling at a cheap price now, so we buy them.
Yeah.
Grab
Yeah.
is
Yeah,
is basically still running as though they are a startup.
Yeah.
It's just that the startup had a reverse merger, which is called
spec or something.
SPAC,
Or
yeah,
something.
SPAC listing, yeah. Special Purpose Acquisition Company or something like that. So they managed to list themselves on the stock exchange. But when you look at their fundamentals,
Yeah, the earnings per share
it
as of 2021 is like negative 6.39
Yeah.
earnings per share.
earnings per share. Basically, the company
Yeah.
has been at a loss.
Yeah.
And when they went public, it was really at the peak, I think, of all of the investing hype that was happening in the market around. Because like when COVID-19 and then the quantitative easing happening, all of the stocks were climbing. Everybody was so happy.
Yeah.
There's when Grab also listed, ring the bell, ding, 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 ding. And they were hoping that this would climb further, but then it declined. That's where people really started realizing, hey, inflation is coming. The world is going to get more expensive. I better park my money into things that I know are going to be good. And Grab just wasn't one of the companies. But I did, I like heard of like the market talk, right? So the market talk about people is like those uncle aunties invest in Grab and then suddenly they see Grab is losing money. They don't understand why. And that's why value investing is so important, or investing knowledge is important. So you know that from the beginning, I should not even have touched Grab.
Yeah.
I can be a Grab user, I can grab food, but don't buy Grab stocks.
Yeah.
At least not now. At least not now.
Yeah. Also for Shopee also, you see it everywhere. But like,
Yeah.
does not mean that they are really profitable at the moment. Yeah.
It was exactly what happened with Dairy Farm. It's my mistake. Yeah.
Your dairy farm
Yeah.
was my Starhub. I think Starhub is doing ridiculously low right now. And I had never looked at the fundamentals. And the only reason I bought it was because
you use it.
Yeah, you see,
Yeah.
we all make mistakes like that. We all make mistakes.
Yeah.
We're not perfect, but at least,
so I think I sold my Starbucks stocks. Starhub stocks, and I lost about $200 or $300 at the time. Yeah.
Okay.
That's
Which
still
is
okay.
like not like my whole life savings but I still lost some money there. I had just learned about this term called investing, and from the books I read, investing, buying companies you are familiar with, buying companies you trust. And I'm like, Starhub is somebody I trust. Now I don't trust them anymore.
$1 and
Yeah,
7
so
cents.
if I compare them from like 5 years ago, it is a 60% drop. That means I got out early. I got out earlier. Imagine if you were uncle, auntie, you bought 5 years ago, you thought the company was all rosy. Oh, you lost 60% of your money.
Yeah.
And you can't afford to lose that much money as you get older.
Yeah, exactly.
There's no more runway
Yeah.
to grow them.
Yeah. And it doesn't take a genius to look at the financials and understand that this company was never going to, or rather is in trouble. It's in trouble.
Yeah. Oh yeah, don't be scared by the annual reports. I think that's what you're trying to say. Don't be scared by the annual reports, because when you come to BIA, the masterclass, Cayden actually teaches you how to read the reports in an easy way. So you don't get confused by all the numbers that you see in the annual report. Yeah.
Actually, on that note, investing is difficult. And there are plenty of get-rich-quick scams that are happening. Yeah. Do you guys know of any of such scams that are happening?
I get a lot of them on my phone sometimes.
Okay, phone one is okay. So there are phone scams are
like the Telegram they add you inside the stock pick.
Yes.
Yeah.
correct.
Oh,
Stock pick,
yeah.
What Bitcoin mining Telegram also.
Yeah.
So many.
yeah. So I as value investors, we have learned to focus on the fundamentals, and the fundamentals are: this is a company. Company should be selling a product, doing it very well so that they earn money. And they can show that they earn money for like a run of maybe 10 years or so. And these get rich schemes are where people lose money because they don't do any research. They don't read up on the fundamentals. They don't read up on the annual reports, and they just like like us, like you buying Dairy Farm and me buying StarHub.
Listen to the market.
Yeah.
Well, so for those listening at home, I hope you're not too scared away by whatever we've mentioned so far about inflation, some scams, like the market going down, and things like that. So don't be afraid. The most important thing is that you must learn the right way and have the correct knowledge before you start.
Right.
So I think that's the most important thing. Keep coming and listening to us, or join the masterclass, right? And so please subscribe and like the video if you'd like to learn more. Alright?
And comment down below on the stuff you'd like us to talk about in the future.
And like Darren pointed out, in the description below is the link to our masterclass. Join the masterclass, attend, understand what VIA will teach you, become a better investor. Then you won't be afraid of the inflation numbers. You won't be afraid of losing your money. And you will understand why get rich quick schemes don't work. And as an investor, you learn how to read annual reports. You learn how to invest properly. All right. Thank you, everybody. Bye.
Bye.